Hello and welcome to Legal Thinking with Ed Wootton.
Oh, and Liam Pape. That was a new one.
Did you see what I did there? I did what I do on BBC Breakfast. Anyway, welcome to this episode. In today's episode, we are talking about residential property, what the market's been like for the last year, and looking forward to 2023.
Yep, our guests today are Joe Kent, who's a senior associate in our Oxford office, and a relatively new starter, actually, Sonal Ghelani, who joined us as a partner in our London office. And to crack off the interview, we have some rather interesting forecasting from the Times newspaper. There was a Times article recently which went as far as to say, wait until 2024 to buy a house. What do you both think about that? Is that an accurate representation of how bad the market could be in 2023?
Personally, I think there's a lot of crystal ball gazing going on at present. Obviously, the market has changed considerably to the market that we were in a year ago. Interest rates have increased. Lots of mortgage lenders have pulled products from the market, and people are definitely more cautious about moving forward with any house purchases. But I think that there's definitely some positivity returning now, and people are starting to make moves where they need to. Ultimately, people that need to buy and need to sell will continue to do so. And I think as we see more and more people proceeding with their plans, I think really that comment will become a bit null and void.
Mm-hmm. And Sonal, from your perspective in the London market, is 2022's kind of performance, the property market in 2022, has that got any bearing on that comment, do you think? What happened in 2022 that might lead people at the Times to say that kind of thing?
Well, looking at our overview of what happened, one thing for sure, if anyone was making a bet at the start of the year, they wouldn't have predicted 5 housing ministers, 3 prime ministers and 2 monarchs during 2022. So it was definitely a year that no one could have predicted. But I think it was a tale of 2 halves for the UK housing market in 2022. The first half of the year, I think the market was quite buoyant. The economy was still trying to recover from the effects of the pandemic. I think stock levels were quite low still. There were a lot of our clients that were struggling to find a property to buy. I often had clients that, even though they found a property to buy, they were having to wait for the rest of the chain to be ready, as others in the chain couldn't find anywhere to buy. I had clients telling me that they were often entering into sealed bids, but it was one of those markets that was still proceeding, people still wanting to buy, and it was there was still a strong demand from buyers. The second half of the year, I think it was still quite busy, but it was starting to taper. I personally had billed the most in August and September. But it was the mini budget, I think, on the 23rd of September that then changed things, what the government called the growth plan. I think it was delivered against the backdrop of the cost of living crisis. The inflation was at a high, and then obviously the energy levels were rising sharply. So this was obviously immediately followed by the sharp fall in the value of the pound sterling against the US dollar. And we could see that the world markets were reacting quite negatively to the increased borrowing that was required as a result of the government's announcement. So we had a lot of clients at that point panicking. The transactions were taking time. They were concerned about their mortgage offers expiring, not being able to get the same rates if that did happen, and then that could jeopardize the whole deal. I think with the Bank of England base rate, which I think was raised, it was 0.5% in February 2022, and then it was raised to 3.5%. And I think today we've got an announcement again where it's likely to be raised to 4%. So I think towards the end of that year, the interest rates did influence the base rate, and interest rates did influence the market. And obviously, with interest rates offered by banks and building societies going up, it affected mortgage repayments and loan repayments, which became more expensive. So I think at the end of that year, the transactions are less. It was certainly less busier due to the uncertainty of the high interest rates, which did slow down the market, and the cost of living and affordability being a factor as well. So that's, I think, how I sum up what happened in the market in 2022.
Well, that all sounds rather gloomy. Is there any hope for first-time buyers?
Yeah, absolutely. We're obviously coming to the end of the Help to Buy scheme, which runs until the 31st of March this year, where historically first-time buyers have been able to purchase a new home with a 20% government loan to assist them, which isn't repayable for the first 5 years of that loan. As I say, that's coming to an end at the end of March. But whilst the media there's whispers that may or may not be extended. I think personally it probably won't be. There's obviously there's still the shared ownership schemes that are available to first-time buyers, where they can purchase a share of a property and in effect pay rent on the other half of the other part of the property. But there's a new first homes scheme that is being introduced, where first-time buyers are able to buy a new build property for 30 to 50% less than the market value. There's obviously various conditions attached to that, as there were the Help to Buy scheme. It has to be a property built by a developer, or it has to be the resale of a property that was originally purchased as a first home scheme property. But the government are certainly doing things to try and keep that first step on the ladder very much available for first time buyers.
And why do you think that's limited to new builds, out of curiosity?
It's a very good question. I think ultimately that the government are obviously trying to encourage new build to take place. That we do have a housing shortage, and by offering these new build properties to the first time buyers and putting them in part of the scheme, it encourages the developers to continue with building and gives them a revenue stream.
That makes sense. So to do our own bit of crystal ball gazing, do you think this year will be the year that house prices start to stagnate?
Yes, I think we're already seeing evidence of that. And certainly a lot of the economic forecasts from some of the big estate agents like Savills and Knight Frank are predicting sort of an 8 to 15% drop in house prices nationally. And I think whilst there are certainly going to be variations across the country, I think it's possibly not going to be quite as big an impact in certain areas, and certainly in our area in Oxfordshire. There's still a lot of demand for property. There's about a third of the stock levels that we would expect to see for this time of year that are currently available. So local agents are telling us that there are bidding wars going on when they're putting properties on the market. Whilst everything is very much price sensitive, there is still a lot of demand, and therefore that is going to have an impact on the property prices and potentially not dropping as much as people are necessarily predicting.
And Sonal, Joe mentioned Oxfordshire there. You're based in London. What's your view from the London property market?
Well, I think the London property market often tends to not be as affected in terms of price. There's still a lot of buyers out there. There's still a strong demand out there in the market. So they may try and chip the price, but they'll have to offer a good price at the outset. And I've often had clients that will try and chip it during the transaction, but I don't think that it's going to be affected. I think it's going to be similar market to last year in terms of the demand's always going to be there in London. So yeah, I think that's what it's going to be like.
Okay, let's look at just keeping it with you, Sonal. What do you see the potential issues in conveyancing that we're likely to see this year? Like the end of Help to Buy, as Joe mentioned, is coming to end in March.
Yeah, so Joe mentioned the Help to Buy schemes coming to an end on the 31st of March, and the new applications actually did close on the 31st of October last year. So that's one thing. There's a lot of talk about climate change that I've been reading up as well, and we've recently seen some extreme effects from climate change with the heavy rainfall, flooding, and we had the 40-degree heat wave that no one can forget because it was something that we'd never seen before. So climate change is becoming a concern. There's likely to be a greater focus on the environmental impact on buildings and materials used in their construction. And this could lead to changes in building regulations and the way that homes are built, as well as an increased demand for energy efficient and sustainable properties. And there are new searches out there actually, to deal with this, environmental searches that deal with climate change and the risks that properties could be exposed to because of climate change. For example, the effect on future value of the property, as well as the ability to obtain future borrowing or obtaining insurance on standard terms. So it will cover things like flooding, the undefended flooding, natural ground instability, which can be caused by extreme heat, and coastal erosion. So that's one thing I think that when I read up on the updates I get on conveyancing is talked about. We are going to get, going on the back of that, the EPC is changing from the 1st of April 2023, where property owners must not continue to let properties that have an EPC rating of F or G. So from the 1st of April, all let properties with an EPC rating will have to have a minimum of a rating of E. One other topic that's is still...
Just to interrupt you, sorry, before you finish your thoughts, is there any estimates on how many properties are in that, do you say F and G rating?
Yeah, well, there probably are quite a lot, especially in London area where you've got, it can affect sort of listed buildings, historical buildings, where it's more difficult for, and more costly, especially if you've got a listed building, to try and carry out works to bring it to the rating that it needs to be. So I think that there probably are quite a lot of historical buildings and old buildings that landlords will have to work out where to get the money to sort that out, because they haven't got that long to make sure that the minimum rating is an E. And I think in the future they're going to change that, so it will eventually reach a C in quite a few years' time in the future. So I think it's just as it goes with all the other things where environmental issues and climate change, it all links together. But we'll have to see how it impacts on landlords coming into that deadline of the 1st of April. But going on to another topic, as I said, is the Building Safety Act, which came into force on the 28th of June last year, which means that qualifying leaseholders in England can no longer be charged to remove unsafe cladding systems, and there are legal protections in place for non-cladding costs. The full implementation of that legislation will be by October this year. But the one thing that's changed, if you go on the lender's handbook and look at all the different lenders, they all have changed all the requirements they have, and it's quite onerous on what they expect their legal advisors to do now. We've got to look out for leaseholder deed of certificates and landlord certificates, which were introduced by the Building Safety Leasehold Protections informations, etc. regulations. That's a bit of a mouthful, isn't it? Which basically helps landlords and building managers identify which leases qualify for the maximum protection under the Building Safety Act. So it's all as a result of the Grenfell Tower incident that happened. So these regulations will only really affect buildings that are 5 stories or 11 meters high. But in London, we see that more because of the amount of buildings and the development that's going on, and it will affect us, I guess, more in London. But there'll be certain regulations that you need to check, certain criteria that you need to check to make sure that the lease does qualify. That's something that we're still learning. As I said, it's all quite recent, and we'll see how that affects things. But I can already see discussions from solicitors where they're a bit concerned about acting on transactions where this will apply, because they're not sure how, what questions to ask, how it'll impact, what they need to look out for. So we'll see what happens with that. I haven't come across such a transaction just yet. And we had a discussion today in our team about if anyone else had, and none of us had so far. But I'm sure we will soon in the London market. So, and the other thing that's also talked about at the moment is the Economic Crime and Transparency and Enforcement Act, which was rushed through Parliament last year. I think it was just over 2 weeks. And that was in response to the war in Ukraine. And the deadline for overseas owners of UK real estate that had acquired property since the 1st of January 1999 was to 31st of January was the deadline for them to submit their registrations on the Register of Overseas Entities at Companies House. So once registered, there is a restriction that then goes on their title. And for those people that are buying from an overseas entity or taking a lease for more than 7 years from an overseas entity, we've now got to deal with these restrictions and all the extra work that goes with that. But that was a recent deadline that just passed. So I guess that will impact on transactions going forward. And again, it's another topic where lawyers are just not sure how to deal with all of this, or concerned about it. But I think there's obviously going to be lots more changes, but those are the sort of topics in discussion at the moment.
I think that'll be quite interesting. Your last point from a transparency point of view. I remember maybe about 10 years ago, Private Eye put together a map of the UK with all the kinds of property and land that was owned by overseas owners. Anyway, so we've touched upon, is there any hope for first-time buyers or potential first-time buyers? What about people who have just bought a house? So say if we were to make up a character called Ned Button who bought a house somewhere in the southwest, what effects will the current state of the market have on them?
If they've only just bought a property, if they're a homeowner, the chances are very little. The majority of people tend to purchase a house. I think the current average is once every 10 years. So by the time that average comes around for Ned, the property market will be doing entirely different things. And this situation that we're currently experiencing will probably be very long forgotten. I think really the impact is going to be on people that have mortgage rates coming to an end this year, or people that are looking to buy and sell this year, and it's those people that are going to feel any impact of the current market conditions. But it really Ned can probably relax in his new home and just watch with the rest of us to see what happens this year.
Very good to know. I think on to kind of more real world examples. I was just wondering if, Sonal, if you had any interesting cases recently that might illustrate some of the things that we talked about.
Well, there's an not personally, but there was an interesting case recently in all the media, I guess, to deal with knotweed, Japanese knotweed, which comes up quite often. But there was a recent case where a seller had misrepresented the presence of Japanese knotweed on their 700,000 London home, and they were successfully sued for over £200,000. The seller stated at the time that they weren't aware of Japanese knotweed, and the buyer had planned to build a workshop in the back garden and discovered some knotweed canes behind a bush next to the shed. So the seller was sued for misrepresentation. And I think one of the things that was mentioned is that in the property information form, there is a question specifically about Japanese knotweed. And you can either say yes, no, or not known. But he ticked the box which said no. So it was he positively asserted that there was no knotweed at the property, and it could be assumed that he would have had to carry out a survey of some sort, because he wouldn't have otherwise been 100% sure to have ticked the no box. So I think that was a case, and as one of my colleagues was saying, when clients are filling out forms, just making sure that they're aware that they're 100% sure when they're ticking that box, that they're certain that there definitely isn't, because of, obviously there are certain facts in this entire case that we don't know the ins and outs of, but that's what came across in that
So we've had a look back, we've had a look at some cases in the present, and we've had a look forward. But to kind of throw the last notion on its head, would you say it's even wise to make predictions about the year ahead? So for context, according to Rightmove, a sale now takes on average 5 months, up from 3. Therefore, if you want to know what's happening with house prices in your area today, there's no reliable data, as it's already kind of 5 or 6 months behind. There's a half a year lag time. What do we think?
Yeah, absolutely. I think making any kind of predictions on the property market is unwise. Not only because of the data lag, but also because, well, as we've seen over the last few years, we don't know what's going to happen. No one could have predicted the pandemic and then the subsequent impact that had on the property market. We saw huge peaks in activity, followed by which followed obviously a complete standstill in the market during the pandemic. So we're obviously coming off the back of a very turbulent time because of those things, and obviously the way that the government often intervene in the property market and the economy generally by making tax changes to get things going or restoring confidence. So we didn't know that the stamp duty holiday was going to come, and we didn't know that they were going to implement the mini budget when they did. And we obviously can all have just discussed the impact of that. So it's entirely possible that there may be some legislation coming that will make some changes this year to even things out or restore confidence. And as you say, the one of the issues that we are facing in conveyancing at the moment is the delay in getting transactions through, which is also making people nervous, is having an impact on chains potentially falling apart if people have to move within a certain time scale. And then there's this, what a lot of data is stating as 5 to 6 months time delay. That definitely has an impact. The data that we have of transaction volumes is generally gathered from HMRC and stamp duty records, and also from the Land Registry, who are really struggling to get registrations through. So what we're looking at in terms of transaction volumes is only a best guess at the current time. So ultimately, if you're making an offer on a property now, in 5 or 6 months' time, we don't know where the property market's really going to be, and making any predictions as to that is well, very, very unwise indeed.
Okay, well, now we've kind of shown that it's unwise to make predictions, I'm going to ask you both to make some predictions. For 2023, I'm just going to slightly kind of take a slight amend on a question that we were thinking of about offering advice to buyers and sellers. Given everything that's happening in the market, what do you both think will be the most regular kind of area of advice you will be giving to buyers in 2023? So, for example, if as Help to Buy's ended, all that kind of stuff, what do you foresee will be the common issues that you think will come up over the year, or is it just completely open?
Do you mean specific legal issues or just
so trying to keep it more legal rather than like offering advice on where to buy a house and stuff?
I think what I was going to say in response to just sort of general advice to buyers and sellers is to get good advice, get good representation, not necessarily from just lawyers, but if you're looking to buy, I think it's predominantly going to be focused around your mortgage. If you are a buyer that needs a mortgage, and with the huge changes every day in what mortgage products are on the market and what mortgage interest rates are doing, I think people should ensure that they have a very good, experienced, independent mortgage advisor to guide them in the best products available to them at any given time, because it is going to be a moving feat, and equally for people that are selling their properties, you need a good estate agent, someone who's got their finger on the pulse. They know their local market. They can see what house prices are doing and not doing, and what the common trends are within the area. And so I think from a conveyancing perspective, inevitably there's going to be all of the things that Sonal touched on in her previous statement about the changes in legislation. We're going to have to figure all of those out as we go along and give advice on those things. But I think really people are just looking to the market in general and whether or not they should be proceeding at X price or Y price, or with this mortgage or that mortgage.
I think that's correct, Joe. And I think the only other thing I can say is people just need to check affordability at the moment with all the extra costs and things, food prices and energy prices and everything else. Affordability and just checking that you can definitely afford what you're going to be buying. But obviously, as Joe said, also making sure you've got all the right people there. And if it's a long-term purchase, there will be wobbles in the market, and then it will recover. And I think you just got to, if they're going to sell and buy, they will sell and buy. But if it's a long-term investment, then just checking you've got all the right people to give you the advice that you need, and all your paperwork in order. But I don't think there's anything else we can do. It's just one of those ones where we can't predict what might happen. There's so many things that have come our way that we just couldn't have predicted. And so, I think we'll have to just wait and see. But that's all we'll be able to say on that one.
So the moral of the story is expect the unexpected. Joe and Sonal, thank you very much for your time.
Thank you very much.
Thank you very much.
As Sonal mentioned in the interview there, she was expecting interest rates to be announced at 4%, and the date of recording for that was the 2nd of February, and sure enough, they were.
Yeah, very accurate. It's a great prediction podcast. So yeah, look out for everything to come true.
Even if the prediction does happen 2 hours before it's announced.
Yeah, when it's all pretty much been leaked anyway. Thank you very much for listening. If you want to find out more about our property conveyancing expertise, make sure to go to our website and have a look at our property conveyancing pages. But otherwise, what can they do, Liam?
If you've liked this podcast, be sure to leave it a 5-star rating on your podcast provider of choice. Do subscribe to us as well. Tell a friend. And thank you for listening.
Yeah, thanks for listening.